Rates over 7%, solidly over 7% is going to slow demand. Slower demand will mean inventory grows. It's in that logic of inventory growing that I want you to know there's an opportunity if you're looking. When inventory grows and you go from 30 days on market to 45 days on market to 60 days on market, you know what happens? Some sellers are motivated. And trust me when I say the best deals are done with motivated sellers. And if you can find a motivated seller and it cash flows at a high interest rate, that is a good day. Alrighty, folks, you heard me on my daily financial news for April 10th talk about the hot inflation reading across the board. You also heard me talk about why I believe it is actually finally good news. I believe the hot inflation reading is going to take all this inflation, rate cuts off the table. I believe we are now going to have mortgage rates solidly over 7% for months to come instead of flirting with above and below the line. And I think this is going to cause inventory to build. It's going to cause the housing market to slow down, and it's going to create some opportunities if you happen to be looking there. But let's have a conversation with Matt, the mortgage guy, who I assume had an interesting alert when he got up this morning after that hot inflation reading. What'd you see first thing in the morning?
First thing in the morning, I woke up and, for people that don't know, like when you talk about mortgage-backed securities and you talk about 50 basis points, it doesn't mean that rates went up by a half a point, but a 50
basis point,
a 50 basis point move is probably, a quarter to 3/8 in rate, and right. I woke up and these things will move 10, 15 basis points, 20 basis points on any given day. A lot of times it's been relatively flat. When I woke up and it said -51, I didn't even have to look at the inflation reading, Mike. I saw that first and I said, yep, inflation came in hot. And
let's, for context, you and I have been doing this a long time. We've been talking weekly for probably 3.5 years now. How many times? So 3.5 years, let's call it 1,000 days. Obviously, some of those are weekends, but we'll still call it 1,000 days. How many days do you think out of the last 1,000 days that they moved 50 basis points up or down in a single day? I mean, how rare is it?
Probably 20 out of the last 1,000. So 2% of the time.
No, that would be 0.2%.
Well, 20 out of 1,000.
Oh no, 2%. Okay,
2%.
Right.
Yeah, I'm
2%.
good with math,
okay.
bro. If nothing else, Mike,
my bad.
Math is my stuff.
There you go. All right,
and that might be an overestimate. Well, it's probably 15 to 20. I bet you that.
Okay. All right. So 1 to 2%, because it's pretty rare.
Really, really rare. And it's so rare that I can remember some of the jumps in the past where, thankfully, I'm older and I'm wiser. If you like it, lock it.
Lock it.
Dude, I swear I just saw something like an old Twitter post and I said, come in here to just confirm that I've been saying, if you like it, lock it for 9 months now or something. And that was like mid 22. And so it's like,
nice.
For years, Mike, we've been
feeling good,
locking it. Yeah. And locked a lot in our branch earlier in the week because we're not gamblers. So yeah,
man, if you were, so this is what I think is going to happen. And I think we saw a little bit of this a couple of weeks ago. And actually I had a comment from a real estate agent. He actually had 3 deals that were in escrow that unfortunately didn't lock, and all 3 got canceled.
I believe it. You know, what's funny is I had somebody reach out to me Monday, in contract on Friday. They were using somebody else, but they just ran a loan estimate by me and said, man, at my credit score, am I really 7.75? And I looked at it and it's a high balance loan. The credit's not perfect. I said, honestly, it was like I do when I say it's legit. Here's the worst part, Mike. When I look at the loan estimate, there's a box locked. No, yes. He didn't lock. I touched base with him this morning. I'm not doing the loan. Just somebody who I've had conversation with. And I said, Sean, hope you're locked in. And there's other issues with the house, but he told me exactly what you talked about. we're probably going to cancel. I don't know if it's all rate, right? It might be that
Yeah.
there's issues with the house and whatnot,
Yeah,
but
sure.
it certainly plays into it.
Of
If
course. That's a
if you're
big move.
right, I mean, and $800,000 loan in California, a quarter of 1% is $200 a month. We're not talking about a
Yeah.
small,
$12. Yeah.
change. If somebody's on the fence, they're like, I don't know if I want to take on this mortgage, and you add $200 a month to it, that might put them over the edge.
No, so I want to play this out because I'm team fix the housing market. And I think it's fair to say the housing market's been broken for a couple of years, probably 3 years. And unfortunately, you can't wave a magic wand and fix the housing market. That's not how it works. It takes time. And if you want to understand what it takes, go back to the 54-year spreadsheet, which I give away for free on my website, onerentalatatime.com. 1978, we did roughly 4 million transactions. We didn't get back, I think it was 4.4 million. We didn't get back to that number until 1994. I'm not calling for 16 years, but it could be 5 or 6. So what am I talking about here? Rates over 7%, solidly over 7% is going to slow demand. Slower demand will mean inventory grows. It's in that logic of inventory growing that I want you to know there's an opportunity if you're looking. When inventory grows and you go from 30 days on market to 45 days on market to 60 days on market, you know what happens? Some sellers are motivated. And trust me when I say the best deals are done with motivated sellers. And if you can find a motivated seller and it cash flows at a high interest rate, that is a good day because rates will not always be here. There will be some time in the next 10 to 20 years where rates will be lower and you have a one-way bet. So doing deals, again, I don't know if people believe me when I say this, but I will happily have rates be 10%. If interest rates are 10% for everybody, I'm okay with that. I just got to find the motivated seller that will sell me a deal at a price point where I cash flow at 10%. Then I lock in 30-year money and I just wait. Nope, rates didn't go down. Nope, rates didn't go down. Nope, rates didn't go down. It's okay. Cash flows at 10% interest. It's okay. So again, I think people that want it, and again, we have evidence. You and I talked the last 2 winters was the last time this happened.
Yeah.
When the market slows down, when demand dries up, sellers start paying for shit. They pay for closing costs. They buy down rates. They do all these things. So I am encouraged that rates will be at 7% for months to come. That's just my warped opinion.
Yeah, and you and I both know, because I think you and I are both have a little bit of a fascination with consumer behavior.
Yeah.
They're irrational at times. And, a seller that has any twinge of like, oh shoot, maybe if I don't lower my price now or give a concession now or do this, maybe I have to hold this thing for 60 days, 90 days. Maybe it doesn't sell. They start to have this, little inkling of fire sale might be the best bet for them. And that's an opportunity on the buy side. And to your point, we want to get the best price. We know that rates are temporary. And so, especially on the investment side, if you buy something and you think to yourself, like, these financing terms aren't ideal, but it still works as a deal. Those are the 2 best investments I've ever made in real estate, Mike, where I didn't have the ability to use conventional financing. I had to use debt service coverage ratio loans. I had to pay 7% in 2019.
Yep.
And 2 deals that made sense at 7%. Guess what happens when I refied those 2 fourplexes to 3 1/8 and 3.375? Those things look really sexy now. Very, very sexy. And rents went up and they appreciated and all the great things about real estate. And so, yeah, you run numbers as an investor based on whatever the numbers are that you can attain at that time from a financing perspective. It can
they work or they don't.
Better.
Yeah.
If you're not writing, nobody's writing, I shouldn't say nobody, but next nobody is writing any sort of ARM or anything like that. So you've got,
God, I hope not.
30-year fixed rate debt, 8%, 9%, 10%, whatever it is, it won't get worse. The bank won't call you and say, I'd like to refinance into 12.
Yeah.
Like that's
No,
that's not how it
that's
works.
not how it works with resi loans.
Right.
And that, to your point, again, this is why I think commercial is going to finally have some pain. There were a lot of people in the commercial who have these arms, who have these 1 and 2 year IOs. They were hoping, begging, and praying for rates to go lower so they could be saved. Sorry, not going to be saved. Pain coming. Deal's going to be liquidated. So if you happen to be preparing for that, which I've been for a year and a half, our opportunities are finally coming. But let's stay on the residential front because we have something in California called the California Dream for All. I'm going to call it 2.0 version. I think there's like $150 million available, up to 150 grand or something. Basically, the state of California wants to become your partner on buying a home. Is that right?
That is correct. And so I'm gonna make a video. If you're not subscribed to Matt the Mortgage Guy, please go subscribe. Check out the videos there. I'm only doing one long form a week. And so I'm trying to, do what I can to. I've got 1,000 videos. It's going to be California Dream for All. It's going to be how to win in this current spring market. All the things that I know based on conversations and being active in the real estate market as a mortgage broker. But California Dream for All, for the audience here, please know this program is not for everybody.
Mm-hmm.
What really frustrates me, Mike, is I'll say it 3 or 4 times. I don't think this program works for you because of X, Y, and Z. And then they ask me, but what about, well, you've got a 10% down payment. You don't need the state of California as a partner. And so, that's the first thing to think about. Shared appreciation means California, CalHFA gives you some down payment assistance. In return for that, like they're your partner on the upside. And what's been very difficult for me in the past is talking to people who have used down payment assistance like they used it in 18 and 19, makes it a lot harder to refinance. So in 20 and 21, when everybody refinanced and they saved $500, $600 a month, there was people that had a second loan, a third loan, inability to refinance, and they missed out, right? Some of them unfortunately lost their homes. And so it's not all sunshine and rainbows. I won't go through all the criteria, but somebody's got to be a first generational home buyer. There's income limits. It's a max of 150, which is a good thing. Your Bay Area buddies were trying to get, 250,000 for a big purchase over $1 million. And so it's different, but it is round 2. Last year they came out, they had a couple $100 million. They ran out within 9 or 10 days. They're doing it different this time as well. All of April, right now they're taking applications. And so you get yourself approved. We've got somebody in my office who Mitch is taking all the California Dream applications. And with that approval, you submit to CalHFA. They're going to do a lottery. And I'm telling some people, you might get lucky and not get picked in the lottery because I truly think that out of 10 people I talk to, it doesn't make sense for 9 of them. And maybe one of them will get in there. But like all things mortgage, you talk to somebody about your personal situation, you get presented options, and then you have an idea of which direction to go. A lot of people just hear program, they're like, yep, me. Like
free money, free money, free money.
Right. Which it ain't free. Nothing's free, especially in California. So look out for that video. I'll go into some of the details and some of the caveats. And of the every 10 people that apply for that, I think that there's going to be a handful, Mike, that end up saying, you know what? I can get gift funds. I don't need a partner. I'd rather have all of the upside if I own this thing for years to come. I'd also like to be able to refinance when rates come down. Also want to get, my offer accepted and be able to do a shorter escrow, which it might take in a competitive spring market. All the things that, you wouldn't know if you don't know. So talk to somebody who has an idea, who can educate you on these things.
Yeah, when I think about California Dream for All, I just go back to the last time. Yeah, they're doing it differently. Yeah, there's a lottery, blah, blah, blah. But at the end of the day, it's going to create artificial demand. It's going to create bidding wars on certain products. And I could not imagine having California be my partner on a property. But that said, consumers are very predictable. All they're hearing is free money. And I expect this program to be oversubscribed by 5 or 6x, just like last time.
Yeah, there'll be
Matt,
a lot of people
oh
in
yeah,
that thing, and I just wanted to add, Mike, because I think it's funny. You know, the consumer behavior is predictable. All they think about is exactly what my thumbnail is going to be. It says California Dream for All. There's a bunch of houses in the background, and it's an open briefcase with money. And
yeah,
so I typed that into Chat GPT and had him do a thumbnail for me last night, and I thought to myself, "Yep, that's
that's the
you
one.
nailed it."
Very, very cool. Yep. California Dream for All equals free money to buy homes. And again, folks, ain't nothing free, but that's what people are going to hear. If
Right.
somebody wanted to reach out to you and see what's what about mortgage, how do they do that?
Go to greatmortgagebroker.com. I have been getting more and more people that have come across, and truly, we just want you to have the conversation to get yourself pre-approved, to get ready, whether you buy or not. I see more and more people that are waiting, and then it's this, you know what analogy I've been using lately, Mike, and I think you'll
Mm,
appreciate this one as a poker player.
mm.
In a poker tournament, the joke is always like it's hours of boredom and then little segments of
Yes,
extreme adrenaline, right?
correct.
People do that with housing where there's no action taken. And then at 6:17 on a Saturday night, like, oh my God, I love this house. Well, let's get everything together. We're going to make an offer. They're due by noon tomorrow. And everything is frantic for a small moment in time. And then if they don't get that house, it's 6
Crickets.
more weeks of crickets.
Yeah,
So don't
exactly.
don't do that. Get yourself
No,
prepared.
get a
Take your
file going. Get a
right.
file. Get a file. Go to greatmortgagebroker.com. Tell them you came from One Rental at a Time. Matt, you're amazing. Thank you so much.
Thanks, Mike.